In an IT bellwether, TCS has reported a mixed set of numbers for the first quarter of FY26, and my colleague Ankur Mishra spoke to the top brass of IT bellwether about the numbers, attrition, AI adoption, business outlook, and more. Let's go across and listen in to a slice of that introduction.
I was using the word uncertain a lot, like people said you're saying uncertain so many times. But I would say people are in a wait and watch mode. And I have a feeling maybe once these discussions are over, maybe by sometime in July and August, there will be greater clarity on the direction the trade discussions take. And also the new bill will be in place. That will also provide more clarity. I think maybe first week of August onwards we should see more definitive direction in the market.
But how are the clients responding in this time in February, from February till now? We have been waiting for this, and of course, as I said, ambiguity, uncertainty are the words which are coming in, and this is a general sentiment across industries and clients, as you mentioned. But is there any delay in decision making due to that?
There is. See, if a particular project is going to yield definitive and immediate results, you find that customers are starting off those projects, which typically tend to be projects what we call cost optimization projects. If a project is for an investment or transformation where the return on investment is uncertain, such programs, so you find that customers are willing to wait for greater clarity before they embark or commit those investments.
Right, but in terms of uncertainty, there is sometimes opportunity as well. Aarti, I was really impressed with the choice of words you have made in the release of use case-based approach to ROI-led scaling of AI. I want to understand from you, are there new areas which you are focusing on, and what is this approach which you want to apply now?
So, hello, Ankur. Great to be here. With the initial days of Gen AI, right, everybody was in experimental mode, trying to understand what the technology is and what it can deliver. But I think after 2-3 years now, I think the power of the technology is well understood. So what customers are looking at is how do they shift from experimentation to, which is a use case based, to delivering projects which deliver a business value. So that's the shift we are seeing. And if you really see, from the new age revenues perspective, new services revenues perspective, whether it's AI, whether it's cybersecurity, or you take public cloud, or TCS Interactive, and many of these new service lines have grown well in this quarter and continue to have a good demand. And what we are doing is, in terms of investing in these areas, and especially talking about AI, we're looking at building industry-specific solutions, bespoke for a customer, and we are also investing in building agentic AI solutions, which are industry solutions that we can take to customers proactively, where we can go and do these rapid build projects, which can deliver short projects but can deliver value faster. And that's one of the initiatives that we are driving. The second area is we are looking at, you've heard about our flagship product, TCS Wisdom Next. So we've just upgraded it with the version 2.0, which has agentic AI capabilities. And we are using our product and a platform-based approach to really see how we can accelerate build out of these solutions. The third important element in in any technology is partnerships. So we are working with hyperscalers, model providers, and also new age partners like Vian AI. We have just signed a partnership, and we are seeing good uptake there. And the last part of the equation, and the most important, is the talent. So we're doubling down on building the talent in a phase where the technology is rapidly evolving.
Right. Kriti, you have mentioned that there is some impact on demand. I want to understand which are these areas which you have identified.
See, like you can look at both from a vertical and a horizontal perspective. If you look at a vertical perspective, for instance, you take manufacturing. Manufacturing, auto is a segment that gets impacted because of the EV transition and confusion on where the investment is going to be, because many of the auto manufacturers invested heavily in EV, but then there is a EV sales are still yet to pick up globally. So then there is a pullback on investments by auto. Similarly, you will see in banking sector, insurance has BFSI sector. Insurance has been impacted for multiple reasons, particularly catastrophic losses in US and other places. So there are some sectors that are more, but of course capital markets, because of the volatility, capital market tends to thrive more than others. So we find this is a broad class. If you take our tech sector, I think by and large the entire sector is doing well. Or if you take telcos have been, because of the expected reduction in interest rates, it's still not, the capex is not happening. So
our guiding beacon remains at 26 to 28. It is our long-term understanding of where we want to operate in, and the cost structures which we have do pose us. But if you see the current margin at 24.5, that is largely given the macroeconomic environment we are in. And if we look at this quarter, we had 30 basis points improvement in spite of investing in building capacity and investing in continuing our investments for long-term growth.
And talking about revenue number also, 63,437 crore. If you talk about year-on-year basis in constant currency terms, down 3%. Where do you think there is still, it is because of demand which is lacking? Why these kind of numbers, and can it be slightly better in coming quarters?
I think if you look at, we should split it in from two perspectives. One is there is a large transformation program which we have been continuing and delivering at record speed. So it's about the 100,000 sites which were to be delivered in a year. That practically completed almost Q4. There's trickle down into Q1. That is one significant impact. So if you look at adjusted for that, or look at growth in international market, that's also impacted, but that the 3.1% gets adjusted to about 0.5%, 0.6% decline still. Now coming to what is impacting, the decline is mainly on account of the overall macro which we are seeing, and some given the start pause nature of trade barriers which we have been seeing, or the general environment which we have seen in the last 3-4 quarters. A couple of industries have been more impacted than others. Mainly, if you can see, the impact has been very conspicuous on consumer, on auto in manufacturing and CMI, versus some of the verticals like BFSI have been doing relatively better.
Milind, the attrition has been at 13.8%. Is it under your comfort zone, or you want it to be better?
Our comfort zone is, like I always say, 11 to 13%. It is a little higher than that, and we continue to basically do all the actions to basically make sure that we bring it under our comfort zone. So whether it's employee engagement, whatever we need to do for our people, we'll continue to do and bring it down to our comfort limits.
Also talking about workforce addition, that has been more than 6,000 this quarter. What is your guidance for the whole financial year? Does it stay as you mentioned in the Q4, it will be like last year?
I think we are going as per plan so far. Going forward, we'll calibrate based on the business situations and decide what to do.
And also, Milind, I want to understand about the wage hike. Last time you mentioned that depending on the scenario, evolving scenario, the call will be taken. Where do we stand now?
We still will continue to monitor the business environment and decide at appropriate time, and I will let you know as soon as we decide.
All right. Samir, we are in a situation where every day Mr. Donald Trump is coming up with new kind of tariffs. The situation is still ambiguous as far as the India-US trade deal is concerned. In this scenario, what is the assessment of your clients, particularly in US? Are they panicking, or they are still trying to understand the situation which is currently underway? And more importantly, is there any gap between the orders which could have been followed up or substantiated by now?
So irrespective of the India-US deal, our focus from our US clients' perspective, there is certainly caution, but they are also looking towards, starting investments, investing into innovation. But during the quarter, if we see, there were, delays in decision making, project deferrals or starting delays, and that is something which we see in the Q1 numbers. But I think decisions, whatever come, provide an point where you can start moving forward and taking it. And there would be opportunity from a TCS perspective in either which ways, because if clients start having a negative impact on their P&L, they look at cost optimization, and who better can help them than TCS.
So are you looking for some new growth areas?
We would continuously explore it. We have a diversified portfolio, and that remains.